Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, here with your real estate market update for the beginning of June 2020. I guess to start off this video, I will share a quote from Vladimir Lenin that says, "There are decades where nothing happens, and there are weeks where decades happen." And surely the last few weeks, it seems that decades have happened, at least in terms of economic suffering and trouble, as well as social unrest and just general disorder and problems in the nation. Surprisingly, through all of the chaos, the housing market has so far remained relatively calm, although there has been a lot of changes in the trends that we've kind of been seeing, and these could be the precursors to a very different shift, a very different housing market than we've been used to for a while, but it may be a little early yet to really make the call, as the numbers are still not showing anything drastic in terms of prices falling, although some of the other statistics and measures are changing in a pretty major way. So let's go ahead and jump right into the data this time. We won't spend too much time talking about theoreticals or general stuff this time around. And we'll start out here. As you know, I usually do Los Angeles County as a whole, and then I also do the South Bay where I actually live. Although I sell real estate all over greater Los Angeles, I do live here in the South Bay, and obviously I work here most often. So in any case, we'll start with Los Angeles County here. We're just going to start out with median prices, and we'll see median prices are flat year over year. So it's up just 0.8%. You can see here it's been relatively flat over the last year. So definitely seems like price growth has slowed down. Clearly, mortgage rates are at or have taken out all-time historic lows a few times in the last month, actually. So certainly they're trying to stimulate with mortgage rates, obviously, with the Fed going to zero and all kinds of quantitative easing and all kinds of other measures that they're taking to try to spur the economy forward and make up for some of the damage and some of the losses. Moving on, we'll take a look here at pending sales, and this is where you see where things are just totally different from anything that we've seen in recent history. You look here at pending sales. I mean, if you look at the graph, this is 5 years, and I mean, we are just literally at the floor. I mean, nothing's happening in the real estate market. Normally, as we get into the middle of the year, you see we get up here and to this sort of range of sales every single year that are in the pipeline, that are in escrow. And we've just had this kind of dramatic fall off. Normally, we would be breaking out, up into this, 5,000, 6,000 sales going on in the month. And we are down here at 2897, down 55% year over year. So almost nothing happening at all in the housing market. Now, of course, people are still buying, people are still selling, but the amount of activity is far lower than you would have seen it in the past. Now, a lot of that may have been attributed to a lot of sellers not listing their homes throughout this pandemic, out of fear of having people in and maybe just uncertainty about what they were going to do next and having to move and those sorts of things. But now we are seeing a change in the amount of inventory on the market, a pretty dramatic change. And so that's what's going to be interesting to see what happens as inventory starts rising. A lot of people that I follow, a lot of stuff that I've been reading coming out from different news sources is predicting a lot of new inventory going to be hitting the market. And that would be my expectation as well. I think there's going to be a lot more inventory on average than compared to several of the previous years, as a lot of sellers decide to try to cash out, maybe move out of the city. People start to work remotely. People want to get out of California because of taxation, all these kinds of things. So now we'll take a look at closed sales in Los Angeles County. And again, we see a similar thing to pending sales, which makes sense. We're down 52% year over year. Again, we're at a level here that we haven't seen in at least 5 years. Let's see if we go and we zoom out further. We haven't essentially been this low, going all the way back to the housing crash of 2008. So definitely not a good sign. Now, if we take a look at the supply of inventory, we are definitely starting to see a huge uptick. We are down year over year, 17.1%, but month to month, we're up, approximately 20%. month to month. So definitely a big uptick in inventory, and I think this number is just going to continue to keep growing. The real question is going to be, is there enough buyers willing to buy, able to buy, that are going to be able to absorb that inventory, or are we going to see a dramatic spike in inventory and then an adjustment in prices to offset that additional inventory hitting the market? Now we'll move in, we'll take a look at the South Bay, and we see here South Bay prices are down 1%, also flat, for about a year, just kind of going up and then flattening out and maybe starting to kind of taper here. Obviously, down 1%, it's not a whole lot when you're looking at a year-over-year figure, but we'll see what happens over the next couple months. Similarly to Los Angeles County as a whole, there's essentially no activity happening, pending sales, throughout the whole South Bay board. All of the sales that they're picking up out of their board members, we're down to 229 sales in the month of May, when, normally in a May, we'd probably be roughly double that. So here, 464, little more than double. So dramatically low sales, almost like we are in December or November, holiday season, and we're here smack in the middle of the year at peak selling season. Same thing with closed sales. We are down 50% year over year. Again, nothing really happening in terms of closed sales in general. Of course, there are people buying, there are people selling, but a lot of stuff is actually sitting on the market. If things are not priced well, nobody's buying them. Getting multiple offers, highly competitive bidding isn't really happening unless it's really the cream of the crop sort of property at the right price. So definitely a big shift there. And then finally here we'll look at month supply, and what we see here is again another huge uptick. So 2.1 up to 2.7. So we're really down just 10% compared to a year ago, which was a relatively high inventory year, as you can see here on the chart. And it's looking like this is really going to probably take off. So I think it's going to take a few months to see if buyers are going to start absorbing some of these properties, and what's going to happen to prices. Of course, rates are low. There's a lot of things the government is doing to try to prevent prices from falling across the board. Different policy, you can evict people, mortgage forbearance, all kinds of other stuff I'm sure that's in the pipeline. So there's no crystal ball as to what we're going to see moving forward. But things are changing, trends are changing, and I think these next couple months are going to be pretty interesting. So that's it for this one. It's a short market update. If I can help you with anything real estate related anywhere in greater Los Angeles, definitely give me a shout. I'm here to help. Click the like button, click the subscribe button if you haven't already. Share the video with anybody that can use it. Yeah, appreciate you watching, and I will see you next time.